Welcome to the C-Suite podcast with me, Russell Goldsmith, and Graham Barrett. We are in Amsterdam for Money20 Europe.
We're producing the show in partnership with LSEG Risk Intelligence, who provide a range of solutions to help organisations effectively manage risk and reduce fraud.
We're going to be interviewing a number of the speakers and attendees here at the event, so really hope you enjoy the show. So I am now joined by Iana Dimitrova, the CEO of OpenPayd. It's actually a welcome back to the podcast to Iana. Unbelievably, it's 3 years, incredibly how quickly that's gone. 3 years since we spoke at this very event. So welcome back to the show. What I thought we could do is in that time, maybe if you could focus on what the key changes you've seen in embedded finance and also the payments landscape since we last met.
Russell, thank you so much for having me. And yes, indeed, it has been 3 years. And the main change that we see today really is the rise of the blockchain technology and the rise of adoption of stablecoins. So first of all, it's great to see today the energy and so many new businesses, so many new use cases. And the optimism overall within the industry. And when it comes to the change that we have seen, yes, as I said, 3 years ago, people were looking at the blockchain technology as something that's very foreign. People were talking about Bitcoin and were mostly scared by Bitcoin. Whereas today there is much greater understanding of the utility that that technology provides. And what we see really is organic demand from our own clients is demand for interoperability across fiat and stable coins, interoperability across fiat and any widely accepted digital asset. So what we at OpenPayd have been focusing on is building that platform that offers the link that connects traditional finance as well as the world of digital assets, is rail agnostic, so a customer can pick and choose whether they send funds through any local international fiat payment rail or through the blockchain in one of the widely accepted stablecoins.
Great. One of the questions you actually touched on this just then on digital assets. One of the things I wanted to look at was MiCA, that's the Markets in Crypto Assets regulation that came into force this year. What does that regulation mean for you at OpenPayd? Do you see this as the green light to scale into digital assets?
Oh, that's a really, really great question because everyone is talking about stablecoins right now, and I cannot talk about MiCA without actually taking a step back and talking about stablecoin infrastructure. So we very recently launched our own stablecoin infrastructure, and the reason why we did that is because the utility of stablecoin infrastructure and generally of the blockchain technology as such is allowing businesses to move and manage money in a more efficient way. And I guess MiCA is a big part of that. MiCA is really the regulatory framework that we needed in order to drive adoption, in order to create the environment for broad adoption of stable coins, and as a result, improvement of how we do cross-border payments, how we do FX, and how we execute payments that usually have been taking an awful lot longer and cost significantly more. In terms of what it means for OpenPayd, again, great opportunity. We just recently received our own VASP license in Europe, and we're in the process of getting it upgraded to MiCA. We see the organic demand coming from customers already to trade in stablecoins. Customers that want to move and manage money globally and want to leverage that stablecoin infrastructure and generally accept, send, receive either stable coins or some of the widely accepted digital assets per se. So MiCA is really giving that assurance, that certainty that the right level of protection is there, the interoperability is there, and ultimately building the trust that's required to drive adoption.
What about when dealing with the digital assets though? What's the implication for the security of the platform, and also how are you going to ensure that it does actually remain safe and secure?
Oh yeah, that's ultimately a very good question because we touch money, right? We help businesses move and manage money around, and building trust is the foundation of ultimately being successful in that. So I think MiCA really fosters, first of all, enhanced customer protection of funds. So anything that has to do with the custody of funds, so the asset custody requirements that it imposes, anything that has to do with enhanced customer protection, the segregation of funds, much stronger operational and generally operational resilience requirements, and I guess just gives a level of regulatory clarity that is required to drive that adoption. Now, I know also that many people do see it as an impediment. Simply because some of the main stable coins or digital assets tend to be excluded from that regulatory framework. And I think this is also something that we need to take a note of. And in the end, also consider what is the infrastructure that a business requires in order to be able to send and receive across all widely accepted stablecoins and across all geographies. And perhaps that is European infrastructure plus infrastructure outside of Europe in order to be able to capture those use cases. Because again, sitting here at Money 2020, we look at problems in payments from a very advantageous position in a way, because despite what we all say, the payment systems in Europe are quite sophisticated, quite elaborate, and tend to do the job. But when you look outside of Europe, actually this is where the real utility of the blockchain technology and of stable coins is coming, because nations, and I'm looking at Africa region, I'm looking at Latin American region, they are generally using stable coins and driving the adoption of stable coins to solve real life problems that cannot be solved by their legal tender, cannot be solved by their local fiat payment processing systems.
Okay, one of the topics that we're focusing on this year is payment fraud, addressing payment fraud. It's often seen as striking a balance between friction and convenience. How can this be done successfully?
I don't have the answer to that question. I'm afraid if I had it, I would share it. I think it is incredibly difficult because ultimately we as an infrastructure provider, we would always aim for convenience and making sure that we deliver convenient payments to our customers. However, with the rise of the new technologies, with the rise of AI, identifying fraud and managing fraud is becoming more and more difficult, and we actually see that fraud is becoming ever more sophisticated. So I think it's about having the right combination of technology and human resources in order to be able to manage the changing nature, the ever-evolving nature of fraud. But again, this is very much work in progress, and we haven't found the solution yet, I'm afraid.
Okay, well, maybe next time when we've got you on the podcast, we can talk further on that one. Last one for you, though, Iana. Another topic that obviously we talk about regularly here is AI. How do you see that shaping the future of global payments?
Oh, that's a very good question. So, how is AI shaping the future of global payments? I think, first of all, AI is definitely already being leveraged to improve a lot of the back-end processes. I mean, we as a company at OpenPayd are already using AI in different areas when it comes to customer success, when it comes to our sales processes. And then when you look at fraud management, you asked me about fraud just now in a moment. When you look at fraud management, transaction monitoring, so all of that compliance back office of global payments. But equally, I think the next step is about rationalizing when it comes to cross-border payments, how to use AI in order to leverage the payment channel that is being used to select the most efficient route for a cross-border payment, for FX, for a currency pair. This is really the direction of travel, and this is really where we would like to see the adoption going.
Great. Well, listen, thank you for sharing so many insights with us, Iana, Dimitrova. Appreciate you joining the podcast.
Thank you so much, Russell, for having me.
Thank you.
Okay, I'm now joined by Pablo Villegas Garcia, who is EMEA Payments Head at AWS. Pablo, how are you today?
Very good and excited to be here at Money 2020, another year, and meeting another one of our customers, the London Stock Exchange Group.
Yeah, well, We should start with some of the key trends, I think, in the financial sector landscape. What do you see as those key trends at the moment?
So it's interesting what we see. I mean, if we look at the market in terms of well-researched houses like McKinsey, where basically they expect payments revenue to come to $3.1 trillion by 2028. We couple that with, for example, the network economy, which is predicted as well by McKinsey to reach, I think it was $105 trillion by 2020. And that means digitally touch revenue, which is what is driving this, right? So whenever you look at payments and the impact that digital and digitalization of payments and modernization in customers have, you see what's the real impact. But if I go down to three key items that I keep seeing in our customers, right? I would say there's three big buckets. AI ML is a big one, all over the place in financial crime. Real-time transactions, not surprise, bear in mind what's happening in the industry and what we have seen here today. And obviously the threat landscape. So let me just go one by one and just share with you a few bits, right? Obviously, artificial intelligence and machine learning have been used by many of our customers several years, even within Amazon, right? Alexa is an example of that, right? But we see GenAI and agentic payments kind of gaining traction. GenAI is already, in some cases, in production, and we will cover that later, probably. Agentic payments are some of the discussions I'm having these days, right? We see, for example, MasterCard leveraging AI ML and being able to basically improve fraud detection rates by almost 3 times. At the same time, they keep resilience, security, and compliance within payments, right? So that's giving an example of where AI ML is at the minute and where it's moving. And I keep having conversations with our customers on that matter, right? The other key element here is real-time payments, right? It's no surprise real-time payments are coming into every market. There are different stats out there, basically call out more than 60 probably kind of real-time payments engines out there in different countries. But the complexity here is that real-time payments brings additional challenges. You need to secure those transactions, you need to monitor them, and it's not easy. You need a scale, you need ability to do that on real time, because otherwise the payment authorization is not going to be approved, right? Where we are seeing that in the market, for example, JP Morgan is a good example. They basically screen in real time thousands of transactions, covering and securing over, I think it was $10 trillion. So that's the scale. You need a scale and you need the ability to drive that, right? Last but not least, threat landscape. You need to authorize payments. We all do. Fingerprint with payments, now it's face. Okay, that's changing dynamics, right? We have in the market tools like Fraud GPT, right? We have tools like Dark Bart, which basically help fraudsters to trick customers into making payments where they shouldn't be doing that, right? But we have seen also kind of improvement from our customers leveraging cloud technologies to basically increase the deepfakes detection, right? An example of that is, for example, IDverse, which is a partner of London Stock Exchange Group, where basically they are able to monitor and improve deepfake detection by 99.99, which is impressive.
It's pretty impressive,
right?
Yeah.
It's just massive what's going on at the minute.
So those are the trends. Which areas of payments innovation excite you the most at the moment?
That's a very interesting one, actually. I love that. I guess there are 3 trends, and actually, in terms of maturity, I would say, right? Obviously, GenAI has now finally taken production use cases, and GenAI is very exciting from a payments perspective. We have seen customers doing suspicious activity reports to report fraud, now leveraging GenAI. And we have actually customers like Remita, a Nigerian fintech, actually leveraging GenAI to basically do, for example, an assistant to process payments or validate ticket receipts, which basically enhance your customer experience, right? That's already there, production, I would say. Our customers are embracing that, right? What's coming and is happening? GPU acceleration, right? GPU, it's making a difference at the minute in the market. Why? Because it's helping to accelerate fraud detection real time. And we have seen that, for example, with our long partnership with NVIDIA, where basically NVIDIA Rapids on AWS has been able to improve basically fraud detection by almost 10 times in the same kind of workflow, but reducing even the cost at 88% less cost than equivalent CPU, right? I'm having discussions with customers on how to leverage GPUs to basically identify fraud and combat fraud, right? Last but not least, this is still not there. It's exciting and it excites me, quantum computing. Everywhere else, right? Every organization is interested in, okay, what's going to happen with quantum? Can I use it? Is it good for me? What's going to happen? At the minute, this is still in the early stages, but we have seen some, say, proof of concept cases, like with Deloitte Italy. They run a proof of concept to basically validate whether leveraging Amazon Bracket, which is kind of our neural network for quantum computing, is capable of doing. And they were able to get some interesting results around the ability to be more precise detecting fraud. Is this in production? I haven't seen it. We haven't seen it. Are the tools available there to leverage? Yes, as we have seen in the market.
Now, on the flip side, what keeps you up at night in terms of financial crime in payments?
I guess me and customers, to be honest, right? Some of the discussions I have, authorized push payment is on the hike at the minute, right? It's one of the recurring conversations I have. Synthetic ID is another one. False positive is another one. But if I break down a little bit out of those three, authorized push payment is a big one. Why? Because it has customer impact, and therefore customers that are impacted because they are tricked into sending payments to the wrong person. Like we all have seen this with love scams, right? In the UK alone, for example, the latest piece of data from UK Finance is almost £500 million pounds were lost to authorized push payment, which is an interesting, and therefore this is where the regulation is coming. Synthetic ID is another one that is coming because at the end of the day we all are authorizing payments. I think the deepfake fraud has spiked to over 3,000% based on what Onfido and Entrust report says. And again, this is where cloud technology, our partners kind of leverage the technology to come up with solutions that basically address and identify deepfake kind of solutions. Last but not least, some of the conversations we're having is around false positives, right? More real-time payments engine, more payments coming through kind of rails, more false positives. Yeah. What can you do to basically leverage the technology you have to put additional data points to identify a false positive from a non-false positive, so that you can basically provide a better customer experience.
And finally, what role do industry consortiums play in fraud prevention?
That's an interesting question, and we have seen two dynamics, let's say, in that space, right? We see the financial services kind of type of led consortiums, and I think TMNL here in the Netherlands is a good example, and obviously they need to meet regulation, GDPR, to make sure that the data that is shared between the entities is not used for other purposes, and you keep privacy, right? But that's a good example of a financial service-led consortium. We have non-financial services-led consortium, like in the case of, for example, Verafin, right, which is more a industry consortium where they share data across different parties. In both cases, the important thing is the ability to share data in a protected and anonymized way to ensure that there is data privacy, to ensure that there is security, and to ensure that the end customer is not exposed. That's where we see a little bit of the change in the industry, because especially as cross-border payments grow and different currencies, different entities, it's more difficult to identify that unless there is some sort of mechanism to anonymize the data, keep it secure, keep it private, but at the same time be able to protect genuine customers.
Thank you so much for taking me through your insights today. Pablo, Villegas, Garcia, thanks for joining me on the podcast.
Been a pleasure being here with you and the London Stock Exchange Group.
Okay, I'm joined by Eliza Wyman, the Product Director, Identity and Fraud at Experian. Eliza, thank you so much for joining us.
Thank you for having me.
Now, ideal job title there in terms of the fraud aspect, because that's a key part of what we're talking about. Global payment fraud is becoming increasingly more sophisticated. What types of fraud do you see as the most concerning? And also, are there any of that are being underestimated by the industry?
Great question. Yes. Payment fraud, fraud in general is evolving and is becoming more sophisticated, as we all know. We all see it. There are so many stats to prove this as well. There's one particular stat that comes to mind, actually, when we talk about payment fraud. And it's actually in a report published by the Merchants Risk Council. They're basically saying that the global losses due to payment fraud as a percentage of the total annual global e-commerce revenues have increased to 3.2% in 2025. And it seems like the biggest impact has been on the small and medium-sized companies. So there are many types of fraud we could talk about. We could stay here all day and talk about all of them. However, if we just zoom in on the sort of the first top three that we at Experian see as most prevalent in this industry, particularly in UK, we are seeing, for example, authorised push payment fraud as number one. This has been and will continue being a top operational challenge for businesses in the next 2 to 3 years. Number two is money muling and scams. In my opinion, this is a slightly underestimated fraud or threat, particularly from a consumer perspective. In one of the research reports, which Experian will publish, for example, we found that more than half of consumers, so 51% of consumers, think that the money muling scenarios don't actually apply to them. However, interestingly, over a third of consumers report having seen online ads that entice them into engaging in this type of illegal activity. And on top of that, 29% of consumers report knowing personally someone who has engaged in this type of activity. So you could argue the level of direct exposure is somewhat limited, but I think the signs of vulnerability are there.
Yeah.
And I think, overall as an industry, we need to do more to educate consumers around the consequences of engaging in this type of threat, this type of fraud. And if we look at the third, type of fraud that we're seeing at Experian as prevalent, that's identity theft.
Okay.
Identity theft is number one, top source of stress for consumers as well as businesses. 1 in 3 businesses today are being impacted by it. And it's really easy nowadays for fraudsters to commit identity theft. They no longer need to rummage through our bins and, steal our letters from the mailboxes. They go online, right? They take our data from social media sites or they buy it cheaply from dark web sources. And then what they do with it, they corroborate that information with made-up information, right? So they falsify these other data attributes, and they use that fake, fabricated identity to then apply for credit cards and loans and open up accounts in consumers' names and victims' names.
Just hearing what you're saying there, and we hear this a lot when we do these interviews about how sophisticated the fraudsters are becoming. Give me some good news. Are the good guys making any progress at all?
Yes, I would like to think so. We're on the good side, definitely. To some extent, yes, we're still playing catch up, but we are seeing definitely a positive side to all of this as well. So just to give you an example, what we've seen in the first 3 months of 2025 is that nearly 130 million pounds of third-party fraud losses were stopped, compared to 180 million pounds in Q1 of 2024. And then if we look at the number of accounts, so I'm talking about prevented current account, savings account openings, that number has also gone up significantly by 92%, in Q1 this year versus last year. So we're seeing companies, organizations putting up defenses more and more and deploying the right technology to kind of identify and stop this type of fraud.
Okay. What about deepfakes, though? And obviously we're seeing a lot of increase in the use of GenAI as well. Are they particularly, hard to detect? And also, how real is, the threat is that today?
Absolutely. Can't be at Money20 and not talk about GenAI, right? And nowadays, deepfakes and GenAI fraud, yes, whether it's voice cloning, whether it's video call spoofing, they're very hard for humans to detect. And they are genuinely a real threat. At Experian, again, we're seeing 35% of businesses being affected in the UK by this type of fraud. For example, if we look at the retail banks, 1 in 5 retail banks have been impacted by GenAI fraud in 2024. But if we look in the first few months of 2025, that number has almost doubled to 48%. So many sectors have experienced this already. Digital-only retailers, for example, they've also been significantly hard hit. So I think there's a call to action here. I think organizations have to deploy the same technology, the same AI technology themselves. It's only with this type of cutting-edge technology including AI, that we can identify and stop this kind of fraud. 23% of businesses seem to have done our report that they are comfortable using the tools they have to combat deepfakes and GenAI fraud. But that's a really disappointingly low number, considering the solutions are out there. Experian offers solutions like this to combat this type of threat. London Stock Exchange Group offers, and so forth. So I think it's a matter of increasing the pace at which organizations adopt this type of technology to make sure their systems are protected, their consumers are protected, and overall that their strategies are fit for purpose.
Yeah. I mean, it is getting so hard. When I flick through just TikTok, for example, and it's so hard to distinguish between what is real and what isn't. I mean,
exactly.
Do you think individuals are prepared?
I think there is a level of fear, indeed. I think there is a level of concern there, definitely. But I think they also put a lot of trust in organizations, in terms of safeguarding their data, their accounts. And that's where I think, we need to do a bit more to increase that level of adoption of the right technology to fight against this.
Okay. Finishing off then, addressing payment fraud is often seen as, you're striking a balance between friction and convenience. In your view, what's the best way of achieving that?
So I mentioned before, we're seeing more and more companies, more and more organizations leveraging the right technology to combat the level of fraud that we're seeing. But I think to your point, the most important thing is how they deploy that technology and how they use it, where they use it in that consumer online journey to make sure that they strike the critical balance between security and convenience. And the only way to do that is by leveraging real-time, risk-based, dynamic approach, which can be done with orchestration and decisioning platforms. So instead of deploying a combination of verification tools across the entire user base, an orchestration platform can make decisions in real time and call the right verification at the right time, so that only certain users or identities who are maybe behaving suspiciously or who want to perform certain transactions that are not according to the same pattern they used to be before. They really escalate only those particular transactions. So therefore, the overall level of friction is lowered, and consumers have a better journey, and in fact, lower cost overall for organizations.
I think I mentioned to you, Eliza, before we started, we've wanted Experian on the show for a long time. You've got fascinating insights that you've been able to share, so I really appreciate that. But for now, Eliza, Wyman, thank you for joining us.
Thank you so much. Thank you for having me.
Okay, so it's actually a welcome back to the podcast to Shachar Bialick, the founder and CEO of Curve.
Nice to be back.
Yeah, good to have you back. You're actually, the last time you joined us, it was remotely. It was a few years ago, so good to see you in person now. You've just spoken on a session here at Money 2020 called Wallet Wars and Cooperation, How Europe's Digital Wallets Are Redefining Competition. Let's start with that. Are we moving into a period of collaboration rather than competition in the digital wallet space? And what does that mean for Curve?
Not sure it's about collaboration and versus competition. I think it's very much the same. So the game in the Wallet Wars would really be the wallet that provides the best customer experience, well beyond the tap and go of the likes of Apple Pay, which works really well. And the second element in that game to win the Wallet Wars is really about distribution. So when you think about other wars that happened in the past, like video wars, Betamax and VHS, by definition Betamax was a better product, but VHS has a much better distribution channel. And in the end, we all know the standard VHS won. So the same, I think, will happen in the Wallet Wars. And the main ingredient of that is scale. For that element, companies like Curve, for example, are partnering with many different issuers and OEMs, like Curve did with Samsung in the UK, Huawei across Europe, Swatch, Garmin, and MasterCard, Visa, PayPal, to be able to reach scale. But eventually, the company that will win the interface, that will win the wallet interface, would be the one owning the customer experience. And by definition, that means that they're not necessarily going to be compromising on features and capabilities for the customer. So there is an element of competition. driven by the winner of the wallet wars. But that cannot happen without partnership as well to scale. So it's a mixture of both partnerships and competition.
What are the implications of this then on payment fraud?
Well, not much. So if you think about it, number one, the ecosystem when it comes to fraud is pretty advanced, especially in the UK and Europe. We have a lot of various regulations and systems that allows you to identify fraud. When you move the wallet into the interface of the phone, you're able to now access additional metadata like geolocations and behavioral and device ID, which basically means you have more data to fight fraud. And you see that with fraud rings where they're using a similar device to try and access and create new accounts with different companies. And as a wallet, because you have the device ID and the geolocation and many other elements of inputs, you can identify those type of fraud rings and so forth. So all in all, the outcome of the wallet wars, the outcome of entering to the wallet interface means that you can reduce fraud.
Great. One of the areas we're focusing on is how AI is changing the landscape for global payments. Do you see it as a threat or an opportunity?
So AI and agentic commerce are actually an opportunity for Curve. Curve developed from day one as agnostic to the form factor, which means you can pay with Curve with a Curve card, which is a wallet in a card. You can pay with Curve now with Curve Pay, it's a default wallet. You can even put Curve connected to Apple Pay and Google Pay or pay online. Anywhere the customer wants to pay with any form factor, wearable or a wallet or a card, Curve supports. Similarly, as agentic commerce starts picking pace, what's likely to happen is that the interface for which customers will interact with to find items to buy and complete the purchase is going to change. And when you think about agentic commerce, there's really two elements for that. The first element is the policy, the budget, the taste, and this is where the AI come into play and identify things that meet your taste of what vacation looks like, what is the right dress for you, and so forth. The other element of the agentic commerce is identity and payment access, and the interface that bring identity and payment access to one place is the wallet. Therefore, we don't see a world, or it's unlikely in our view, that agentic commerce can work without wallets. You have to create a wallet connected to the agentic AI to enable you this interface of interaction directly with multiple websites and merchants and retailers. So the end game, as we see that of agentic commerce, is that a customer will have a different interface, but it would have to start to have the wallet with identity and payment systems. And that's where Curve comes into play with the wallet and collaborates with other agentic commerce to create the policy and the taste, if you like.
Okay, I want to finish off on regulations. Just a quick one on that. Are there any regulations that you see having the biggest impact on digital wallets, and also how do you ensure compliance without sacrificing that user experience?
Yeah, so in regulations, of course, there's a lot we rely on. So a good example is the opening of Apple NFC in Europe. It started with Curve about 4 years ago, a project in the company we call Project Ella, based on the Ella Valley where David fought Goliath and won. And it took us 4 years to convince the European Commission regulator that what Apple conduct is, the behavior they do in the market of restricting alternative wallets to access their NFC, has no grounds. Obviously, Samsung and Android devices allow alternative wallets. And that change in the market made a huge change globally, because what happened in January 24, the European Commission opened up the market for alternative wallets on Apple devices. And what happened 6 months later, in August 2024, Apple took the first foot forward and opened the NFC across all global markets. So Canada, US, Latin America, Europe, UK, Australia, Singapore, and so forth. So regulations and regulators can drive a better level playing field. Our next challenge is really the UK, where the way Apple opened up the NFC is through the secure element, which means there's more complication in development and more cost of servicing. And we hope to see the UK driving a similar regulatory landscape as Europe did, our neighbors, and offering an HCE solution for NFC. And many other regulators in the world, I believe, will follow through as well. Yeah. So it's a matter of time and patience, but regulation, especially in Europe, has a very good way of creating a level playing field.
Yeah.
Not all regulation is always good, but most of the times there's a good reason for that. It's just harder to create them.
Great. I love the story behind the name as well.
Ella.
Yeah. Fantastic. Shachar, Bialick, thank you so much for joining us.
Thanks so much, Russ.
Pleased to say that I've now been joined by Gabriela Nistor, who is the CEO of SaltBank. Gabriela, welcome to Money 2020.
Thank you. I enjoy a lot being here at Money 2020 and telling our story.
Yeah, we really appreciate you taking the time to speak with us on the podcast. So let's start with SaltBank. It's been, just over a year since you launched as Romania's first neobank. How's it going, and where is the bank today?
So we launched the bank last year, and now after 1 year we have 500,000 customers.
Wow.
Many of them active customers, and now we are in the second year of activity, in fact building the foundation of the future bank, because last year was the first year, so we wanted to have more customers, but this year we really put a lot of new functionality, new products in order to build the future of the bank.
Excellent. And tell me, there's a relationship between Salt and Starling Bank, isn't there? What is that?
For this I should tell you the story on how the project came to life. And in fact, Salt Bank is a subsidiary of the largest Romanian bank, which is Banca Transilvania. In 2021, they bought a small bank in Romania, and they decided to build from scratch a new digital bank, so the first digital bank built in Romania. And we have seen many suppliers, many vendors, and with each supplier, in fact, the architecture of the system was very different, of the to-be system, was very different. But in the end, when we met the people from Engine by Starling, we realized that the technology behind, first, the fact that technology was proven in a successful bank, which was Starling Bank. Second, their system, their core banking system was pre-integrated already with the call center platform and also with the card processing system. We decided that they are the best match for us, and also the chemistry we had with the team was amazing, and we decided that we should go with them.
Excellent. Now, what we're talking about in all these interviews is fraud and fraud prevention. So it'll be great to get an insight into the most common types of fraud in Romania and, of course, how you are combating them.
I think the most common type of fraud in Romania are following the pattern of frauds in Europe and in the world.
Yeah.
And mostly now you can see social engineering with fraudsters impersonating banks or other institutions, even trying to ask people, vulnerable people, to give them the card details or to give them sending them links to make payments or asking them credentials. And many people, they don't know how to act, and they do this. And apart from any other bank, so all the banks are fighting this fraud, and they are trying to educate these people. But we said, let's do more. And in fact, the third pillar in our value proposition, it's exactly related to trust and safety for customers. And we had, even from the beginning, some features, interesting features. For example, our card, they don't have sensitive data on them. For higher payments, you have to input a password as a second layer of authorization. But now recently we launched 2 different functionalities under this pillar. One is call monitoring for your own protection, and the second one is Help Mama.
Yeah, I was reading about these. I was going to come on to ask you about those because they sound fascinating, because it's kind of blending emotional intelligence, isn't it, with digital security. What inspired that approach?
For call monitoring, we were inspired by Starling Bank. They had this functionality implemented, but also in the UK market, we have seen this in other banks. And we said it's a great functionality also for our customers.
Tell me briefly, what is that functionality?
Call monitoring is, as I said, for your own protection as a customer. So if someone else is calling you, impersonating the bank, and is saying, I'm calling you from Salt Bank, for example, you can open the application and you can see in the app if the call is real or not. If it's real, you will have a green banner saying that you are now in a call with Salt Bank, you are speaking with the X operator. If you are not in a call with Salt Bank, the banner is red and is telling you that you are not in a real call with Salt Bank, so you can go back and close the call. And but Help Mama is for parent protection. And here the inspiration came from a conference. I was here last year in Amsterdam at a conference, and it was a presentation from a regulator, I think from Sweden. Okay. And they said that there are vulnerable people and we should try to protect them, maybe, I don't know, supervising their transactions. And I go back to the bank and I told to my team, I want to have this. And I don't want to build something for kids, because every single bank in Romania, they already have app for kids. But for parents, nobody has nothing. So we said, let's build something for parents, because they are more vulnerable now. And we start to think how to link. And in fact, I can associate my app with yours, and I can become your protector. And when you someone maybe is calling you and ask you to send a payment somewhere, I will receive a push notification, and I will have a message from your side, and you can tell me that someone told me that you have an accident, or someone asked me to make a payment. And you can call the parent and said, look, Mama, what are you doing? Don't do this payment. Or you can supervise the payment. But more important is the fact that you don't see the transaction of the parent. You don't have access to the money of the parent to deposit and so on, because also they may want to have privacy, and this is very important. We looked at average age of our customers, which is 35, and we said probably their parents are between 60 and 80. And at this age, parents want to be protected, but they also want to have privacy and to remain a little independent.
Of course, yeah.
And for this reason, we imagined this product, and I don't think, and I don't know any other bank to have this type of product.
No, I think you're right. I've never heard of it, certainly. And it's very empowering for your customers as well, isn't it, to play that role in their parents' lives. That's brilliant. Okay, so this time last year, you had that innovation from Money 2020. What further innovation do you anticipate in fraud prevention?
We prepare a lot of things. Also, we start thinking now on how to protect even older parents, so more than 80, when privacy become less important than the other range of parents.
It's interesting, that approach, kind of segmenting, the age groups, aren't you? And thinking about
according
what really
to
works.
their needs and their kid needs. And we have a lot of Romanians working abroad, and we said you can become more, I don't know, you can have peace of mind if you know that you can protect your parents back home with this type of approach. So we are preparing this, and we are preparing another functionality under this pillar of trust and safety. And but I would like to announce maybe next year the other one.
Okay, so we're going to have to speak to you next year as well to find out the latest updates. Well, that's brilliant. Gabriela, Nistor, thank you so much for joining me on the podcast.
Thank you.
Really hope you've enjoyed these conversations from Money 2020 here in Amsterdam. Thanks again to our partners, LSEG Risk Intelligence.
If you've enjoyed the show, please do give us a positive rating and review on your favourite podcast app. But for now, from me, Ross the Goldsmith and Graham Barrett, thanks for listening and goodbye.